Hello traders, and welcome to the market opening preview on a Tuesday, December 2nd, 2014. Great to be with you, coming to you live from Pattaya, Thailand, with bright blue sunny skies and white sandy beaches. Traders, this is brought to you through FXCL Excellence in Trading. Traders, great to be with you on another trading day. Some stuff happened yesterday, a little strange, but we'll talk about that when we get to the news and commentary. Traders, if you would, please let me introduce myself to you. My name is William Gilday, and I'm your moderator through the Market Opening Preview series that is brought to you every single trading day before the London Open. Traders, I started trading in 2006. Traders, in 2008, I retired from a wonderful career in the public safety department out of the great state of Florida. Decided to get on Thai Airways, come over to Thailand on a 3-month tourist visa to take and celebrate my 27-year career. Well, traders, it's 2014 and I'm still here and trading Forex every single day. Love being in the markets, listening, seeing what's going on, listening to fundamentals, watching charts. It's just so exciting, and it's always great to be doing these videos every single day for you all and also for me. It helps me probably more than it helps you. All right, that's just a little bit about myself. Let's get over to the legal stuff. Okay, risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most of all, traders, please do not trade money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, traders, let's talk about news and commentary. Big happening yesterday was Moody's downgrades Japan from AAA down to A1 plus rating. I assume that's why the pound yen moved 130 pips in the other direction. It's been bearish, and all of a sudden, boom, up she went. A couple of pairs really took off to the upside. And I'm assuming that's why that happened. The other data that came out really didn't affect the markets. Markets really didn't respond to it. I was not around for the ISM non-manufacturing late yesterday, so I do not know what happened there. Okay, as you know, I do this in the Asia session, and before my live trading room session that I did today, the Aussie had building approvals which came out at 11.4% versus 5.2%, and also media impact was current account at negative 12.5 versus negative 13.5, and I will tell you there was no reaction. Okay, so in the Asia session we still have data that's going to come out, and we have the Aussie has cash rate and RBA rate statement is going to come out in about 2.5 hours. I'm sorry, an hour and a half, 90 minutes from now. So keep an eye on that. That'll definitely bump and grind the markets a little bit there. And in our London session, we have the Great British Pound Construction PMI. That is for sure to move the market. Okay. I don't see anything in the New York session today, Tuesday, December 2nd. All right, let's take a look at the numbers. Wow, looking at the numbers, looks like we got a lot of red. The Dow closed down 51.44%. The NASDAQ closed down 64.28%. And the S&P 500 closed down at 14.12%. Red out of the U.S. closed. The FTSE 100 closed down 66.25%. The DAX closed 17.34%, with the CAC 40 closing at 12.85%, all in the red. The Euronext 100 was in the red at 2.52%. The currently trading Nikkei 225 is down 6.72%, with the Shanghai in the green at 7.63%, and the Hang Seng also in the green at 29.86%. Let's take a look at gold as we do every day now. Gold is down 10.10%, currently selling at $1,207 an ounce. All right, that's what's happening there. Just a note on silver. Silver is down in the red 0.33%. So that is what is going on with the numbers. I think we have a good trading day ahead of us. Some really good trade plans we set up today. So anxious to get to the charts. So why don't we do that? These are the Forex 60-minute chart review, and we're going to start with the euro dollar. We've got some challenges here. A lot of these currency pairs are in extreme positions, whether they're at the resistance level or they're at support. And what's happening is except for the euro Aussie, nobody has actually broken out and has changed trend. So there's been no change in trend in most of these pairs. The only one that has done it and was recognized yesterday was the euro Aussie. It is now bullish, in my opinion. The pair is now bullish, and we'll talk about that when we get to it. So here we are at the euro dollar, and you can see that this is now hugging the 200 exponential moving average on the 60-minute chart. And basically I'm waiting. This is a 4-touch trend line, so it's valid. Let it break this trend line to the downside. I mean, we're bearish in the euro dollar. Just look at the daily chart. There's nothing else you'd want to be except for bearish. So we want to close below the trend line. Nice bearish candlestick formation. And you know what? Let's take this down to 1.2426. All right, moving over to the pound dollar. Pound dollar is in another very awkward situation. It's very bearish. It's sitting in support. But it had one big blue day, and it was yesterday. And it made its bounce. And here we are now. We are above the 200 exponential moving average, and we basically sort of, kind of, maybe have a flag pattern here. However, I'm bearish in this. I want to see this come down. Do I think it's going to happen? Maybe with construction PMI coming out, it might move it to the downside. We'd have to see how that works. But I really want this to come down below the 200 exponential moving average, or it's going to go across that trend line and it's just going to go to the upside and go back up to resistance. That is possible, but it doesn't look like it. Look at the candles that we're looking at. We've got an indecision candle and then the current candle. So either way, you're going to stay sideways, or this is just going to continue its trend to the downside. And we will see what happens. I wouldn't do anything with this pair until the London Open. All right, the Aussie seems to be coming back into its ways, back to its bearish ways. It is bearish on the daily chart. You can see it closed the gap, looks like in New York. It did close the gap. I put that resistance line at there at 0.8514. That's our stop loss. We want to basically see a close of a candle below that trend line. That is a 4-touch trend line, and that is valid. And at the time it closes below that, I would wait for the second candle to come out, make sure it's red, and take that to the downside. I don't know if you need to put your stop all the way up there at that resistance level. I might just put it just above the trend line. Maybe not give this too much of a leash, but we do have more data coming out. Probably right as soon as this hits the YouTube channel, we will have data coming out of Australia. So we'll keep an eye on that, my friends. Here's the Euro Aussie. The Euro Aussie is now in a bullish trend. It's taken out all the highs. It's proved itself, and we are looking for an up move. Currently, we are right at where we want to be. And, you know, I put this support line here looking for it to come back down and take it up to that resistance level. I have to tell you, traders, this current candle has a nice wick on it. And if this gives you a blue candle, there is no problem entering this before the London Open. And just take this up to that resistance level. And I would scale this and see if it breaks it. This might go through that resistance and just keep going. So I'm for entering into this Euro Aussie trade to the upside as soon as possible. But, of course, I'd prefer it to come down to 1.4650. Our stop is the 200 exponential moving average. Now, if you take it where it's at, your stop is that support line. everybody understand that the stop would be 46.50 if you were to take it now at the current price. If it comes back down to support, then your stop would be the 200 exponential moving average. Let's talk about the euro yen. The euro yen is very bullish. However, the daily chart is sideways in a nasty range. It's just all over the place. Very hard to read. So I'd keep a really close eye on that. This is a 3-touch trend line. I only want to really take this to the upside. So I'm looking for this to come above the trend line, and we could take this up to resistance at 148.23, and then just reevaluate. You're surely going to be way into break even, and maybe just let this baby run. But we are bullish. But if you look at these current candles, they're weak, they're small, most of them are indecision candles. But I do think it's going to stay with the trend, and we will continue to the upside. And that's all I'm looking for. If you look at this chart spatially, you'll see that this is giving us higher highs and higher lows. And let's just stay with the trend. All right. Let's move over to the New Zealand dollar. I have to say this is an absolutely ugly chart. The daily chart's even worse. I'm not trading this New Zealand dollar today. I will be honest with you. It's bearish. It's at support. But if you look at the daily chart, it is just really in a mess. It's just all over the place. And remember, this is a commodity pair, so data affects how this pair is going to react. And we have to respect that. I only want to take this to the downside. I don't want to buy the New Zealand dollar. I want to sell it. I want to buy the dollar. So I really want this to come below the 200 exponential moving average. And I would like to sell it down to 0.7794 and take profit. However, if this turns around and at London Open, we're in a situation where we should take this to the upside. Traders, do not be afraid to take this up to that 0.7920 area and sell, buy this if this bounce off the 200 works. So I put the trade plan in as my bias to the downside, and that's because of the daily chart. However, this might give us a buy opportunity. You can see left of the chart that it has respected this 200 EMA for a long time and continues to do so. So therefore, there's a chance we'll be buying this today. But I might stay sidelined on this pair today. Not sure. We'll see what happens at London Open. Traders, I would like to thank you for joining me on this beautiful Tuesday morning out of Pattaya, Thailand. On behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I wish you a great trading day. And remember, traders, to trade smart and not hard. Until tomorrow, traders, have a great day, and we'll see you then. Take care now. Bye-bye.